How's it going, guys? It's Raffer from Beyond the Huddle, and welcome to this week's Bitcoin forecast. As always, we're going to get started by talking about the SMI, the Smart Money Sentiment Indicator. Then we'll move on, talk about the COT to see what the asset managers have been up to this past week. And then we'll wrap it up with some price action concepts to see what levels on the weekly and the monthly candles we should be interested in. So with that being said, let's get started. Okay, guys, so getting started here with the SMI, the Smart Money Sentiment. Again, this is a tool that we like to use, gets delivered straight to our Discord premium group, and basically what it does is that it gives you the sentiment of the spot market. So the same exact way that we're going to look at the COT in just a little bit to see what the large players in the leverage market have been up to. This allows us to see the current mood of the spot market and whether people are accumulating or they're distributing. Okay, so whether they're buying coins and buying positions, or whether they're selling those coins and getting rid of positions. So as last time we spoke about this high right here being made on this long-term distribution that showed up. As you can see here, anything red is distribution, and then that led to this move lower. Now, as we were dropping, we posted on Twitter, I don't know if you guys saw it, but during this spike down right here, we noticed some strong accumulation, and we could see it both on the short term and the long term, and then that right there told us that we should have seen a little bounce. Now, remember, the key here was that when we had this bounce right here, what we wanted to see was a move back above our weekly level. Okay, now obviously we did not see that, and we actually ended up stopping at a previous resistance level at around the 48 point something K, 48.5 or something like that. So because we were never able to go above on our price action, and remember that's the way it works, right? We have the accumulation. It's not a timing tool, even though if in hindsight it looks that way. You can see right here how it was red this entire time, but during that entire time, that's when it went straight up, and then it actually went straight up one more time. So what you need is the price to confirm your sentiment. Okay, very, very important stuff right there, guys. So now what we have actually, which is perfect timing for me to be making this video, we have this pretty decent move down here on Bitcoin, about 5%, and we had a nice pretty aggressive increase actually on the long term. It's a little blurry, but promise you it doesn't look this way on our Discord. It's just because I took a screenshot of it. And then we have this quite aggressive rally on the short term. Okay, so short term players are actually accumulating much harder than the long term one. That's to be expected, and that would mean that if we can see a strong bullish reversal signal in price here, and we'll talk about what those levels are later in the video, then we can go ahead and imagine it is going to be a long term low. Now remember, for those of you that have been seeing these videos for a couple weeks now, this entire accumulation from December 12th all the way till right now has all been the same type of accumulation levels that we hit almost 90 days ago when the September low was being made. Okay, so that's important for us to keep in mind. And now let's move on to the COT so then we can get to the price action part of the video. Okay, so moving on here to the COT, where we get to analyze the asset managers. I decided to start using the website and then move on to our indicator on TradingView, and that's because when I do a screenshot, a lot of you guys always ask me where the website is. So you can see it right here. It's called tradingstir.com/COT/futures, and you can find this right here. You just go to the BTC one. Now, as you can see, as of December 28th, for the asset managers right here, the institutional money, there has been actually a decline of 76 contracts to a total of 5,554, and their shorts have actually increased 108 to 859. Now, normally, like I said before, time and time again, a 100 increase might freak me out, and a 76 decline might freak me out. But that was back in the day when the open interest was only at like 4,000. So you can see right here, we've actually like tripled that. So now what we want to do is pay attention to the longs versus the shorts, right? When we do that, we hover on this right here, and you can see that 86%, 86.6, so almost 87% of the market, of the asset managers, the institutional money is still long. Now that's very important because you can see, even though you had a big, relative increase here, or I guess it looks big, 1 on 8, and there's 76 contracts gone from 5,500. It's still not that much. Okay, so we're still at a total of 5,554 contracts long. So guys, 86% bullish, 86.6, almost 87. I am not worried about this at all. For those of you guys that want to see the historical, you can do it here and all that good stuff. But of course, what we like to do is go here to our weekly chart and use the trading view charts, because that's what we like. As you can see here, what we want, what I've been saying that we wanted, is this line, this green line that is your percentage long, to stay above this 80% threshold that I like. And as long as we can do that, again, we will still stay bullish and be looking to see something comparable to what we saw from August to September. From August to January, and comparable to what it was back in, April, May of 2019, all the way up until mid, late June, early July. So that's what we're looking for right now. But of course, unknowingly, what we have to do right now is have price catch up. So let's move on to the price action session to see, what we're looking at there. Again, we're still bullish based on the COT, and we can still see the SMI. So the sentiment on the spot market is telling us that there's accumulation going on. So let's move on and see what price has to offer. Okay, guys. So taking a look now at the price action part of the video, I want to take you guys to this tweet that I posted last week. And it was essentially, we were starting to talk about Bitcoin being below the weekly resistance, right? Now, remember, right here, we're talking about the COT being bullish. We talked about the SMI and all that good stuff. But then what we wanted to see was, we wanted to see these two levels get broken. So that was our weekly level right here. That was last week's weekly level. And as you saw right here, we went up. We hit the 52K level, crossed back below the weekly level. So that turned you bearish. Okay? Now, the importance of these weekly and monthly levels is that it tells you how aggressive you should be in the market and how much risk you should have in the market, right? So what percentage of the portfolio, which is all stuff that we talk about in the BTH premium group. But essentially, the minute you cross back below this, you should be easing your risk. And then now, as I spoke on the first, so about 4 days ago, the SMI and the long term and the short term were both looking pretty strong. You see, we had a little bit of a rebound right there. But what we needed to do, remember, as I keep saying, this is just a sentiment tool. We need price to confirm your sentiment, okay? And that's something that we need to understand, because if I'm using a sentiment tool for entries, I'm gonna end up very hurt until it finally ends up being the low, okay? So obviously 45.8K would have been this level right here, and that never got broken to the upside. So if we go to the current prices, you can see right here, after this rebound right here, what we needed to do was go above this, and that never happened, okay? So that brings us to this week right here, and that meant that we were taking a look at what? A new monthly level, okay, and a new weekly level. So remember, the monthly level tells us basically the bias of how we expect to be that month, and the weekly candles does the same. The weekly level does the same, but for the weekly candle, okay? So starting the week, we were hovering right on the monthly, and then we fell back below it. Now, when we fell back below the monthly, because the SMI was accumulating and it was going higher, right? There was more people buying that drop. I was thinking to myself that we could expect a short-term bounce, and then that would let me know how aggressive I should be with my portfolio as we're hitting the monthly. Now, much like you guys, I was expecting it to get broken and then go straight up, but guess what happened? The minute this down move happened, we were back to the weekly, okay? So then we hit the monthly one more time, and then that's led us to this move right here. And the kicker here is that now, because we're below the monthly and below the weekly, that's a double negative, okay? So there's both things against us, and that's telling us that we need to go lower to some sort of more, a bigger support, okay? So now the support becomes what? Well, between the 61 to the 78, that's just a regular fib level. That's our discount zone. And now I'm looking for it to, stop somewhere around here. Now, as I just showed you guys in the SMI, we're still accumulating quite aggressively there in the spot market here. And obviously the COT is still bullish. So that just leaves us with, when will we finally get the weekly levels to turn bullish? Obviously, as you saw last week, we started the week off, hit the resistance, then turned bearish. And now this week, we're bearish on the monthly and bearish on the weekly. If we ever break these two levels, that's when I would expect us to start seeing some, green pastures for the year. So about I'd say about a 5 to 6% move higher. There it is. So 5 to 6 for the weekly, and then finally about 8 to 9%. If that can happen right there, those are our new resistance levels. That's when I would be looking to, go full risk, go aggressive in this market. And then as long as we stay below this level, honestly, guys, we'd have to, like I said, target this discount. But anything after that, we're targeting this weekly discount. So we got this weekly discount. Now, for me to be a long-term bull on Bitcoin, right, which is what I am right now, you see that I'm not switching my bias on the long term, back and forth, back and forth. Now, the short term, obviously, the week level and the monthly tells me what to do there. But at the worst, right? So at the worst possible scenario, and I actually just posted about this on our BTH Premium, a couple days ago, about, we could potentially see a 25% drop. But even if that drop happens, I'm not afraid, right? I'm not scared until we lose this gray zone, and then if we lose this yellow zone. This yellow zone has to hold. If we lose this, then I would be expecting the yearly candle to then be bearish, and for us to start targeting some very, very sad levels that we really don't even want to see or talk about, okay? So for the time being, again, be very super careful because we are both below the weekly and the monthly. It just happened, this one aggressive candle. I'm hoping that by tomorrow or soon in a couple of days, where we've rebounded, kind of like what it does. You see, it does one aggressive candle and then it rebounds very slowly. Right here, you have one aggressive candle, then it rebounds. If we can do that, then we're good. We can add risk back on. If not, guys, please half your risk. Be very careful until you go back above these levels. So with that being said, check us out for our altcoin video tomorrow. That'll be on Ethereum. And then check us out on the BTH Premium Discord, guys. If you haven't checked out, there's actually a 7-day free trial going on right now for anyone who wants to check out part of the advanced concepts. We're not giving them all out, but there's a lot more goodies. You obviously get access to our SMI, you get access to our SMS, and a lot of other great stuff. So with that being said, guys, I'll see you next week. Talk to you later, and stay safe. Peace.